I just would love to get your thoughts, David, on whether the CPI, the PPI coming in hotter than expected moves the needle anywhere on your radar, even just a touch.
Not really. First of all, on the CPI, I think it was close to being exactly on expectations. The one thing that seemed to be stronger than people had expected was hotels. Hotel rates had fallen a very sharp 3.6% in the prior month. They jumped 4.2% this month. And that was one of the things that pushed up shelter costs. And if you take that out, there's really not much else going on here. Meanwhile, we're looking very closely at the price of gasoline, because what's happening is, even though crude oil prices are holding in at fairly high levels, we've seen refiner margins come crashing down. And so the price of a gallon of gasoline is now 19 cents lower than it was a month ago. And so I think that bodes well for a better reading for October CPI. So right now, I think we're still on track. I think we're on track for CPI, for year-over-year headline CPI being at 2% or less in the fourth quarter of next year, and the consumption deflator also being at 2% or less by the fourth quarter of next year, and that's 1 year ahead of the Fed's target. And that's, so overall, this report makes me, I'm still very optimistic that inflation is coming down. And meanwhile, we do have these other issues. I mean, we have this expanding UAW strike. I think the continued sort of chaos in Washington makes it quite possible that we'll have a government shutdown in November. So I think there are, there's still plenty of weights on the economy here. And certainly when I look at inflation, I still think it's coming down.